Trader's Edge with your host, Steve Rhodes.
Good morning from TFNN. Welcome to the July 8th terrific Tuesday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone had a magnificent Monday. Let's make sure we do all that we can do to have a terrific Tuesday. Now, today is a special day, and I want to say a very special thank you to everyone at Interactive Data Company, the trusted leader in financial information, best known by each of us as eSignal, for their extraordinary efforts, folks, their extraordinary efforts in launching TigerTV from within their trading platform. That's right. You can watch TigerTV from within the eSignal platform. This was a vision of mine that I began working on quite some time ago. So you want to talk about your rocky moments. Hey, Steve-O's having a rocky moment here today because it is now a reality. It all made possible because of the team here at TFNN and the team at Interactive Data. So from the bottom of my heart, thank you to each of you that have had a hand in making this vision, turning this dream into a reality. And I'm excited today, as I am as excited today, really, as I was when I opened up my first location at Disney World, and then Disneyland, and then finally inside Walt's Castle. So, yes, today is a special day, and to each of you that have upgraded to version 12 of eSignal, yeah, the way to be able to see Tiger TV live with inside the eSignal platform is to upgrade to version 12. So for all of you that have done that, I say welcome on behalf of each of us here at TFNN.com. You see, this show, folks, it's really all about you. And it's an open forum for you to call into the show to ask our opinions, ask my opinion during the next couple of hours of what the market is doing and the reasons why. And I'll also give you an idea as to where the market is likely headed to. Of course, the way that you do that is you give us a call at 877-927-6648. Again, my name is Steve Rhodes, the morning anchor here that gets things kicked off for us for what ends up being 9 hours of live programming each and every day. So there's a number of commentators that'll be on with each of you during the day, and I'm here for the next 2 hours, though, and I'll do everything that I can to teach how to master the tools for trading. That includes tactical tools such as A to B equals CD patterns, Fibonacci expansions and retracements. Both those combined turn out to form Gartley and butterfly patterns. And, of course, I like to use Japanese candlesticks. And the reason is because these are the signs that the bulls and the bears make for you and I each and every trading session. I'll also share with you strategies because unlike most traders who focus only on tactics, you and I know that to really achieve our goals and our dreams, we've always got to think like a strategist. And that's what I call mastering probability. It also is the name of my newsletter service available here at TFNN.com. In fact, if you go to the homepage at TFNN.com, click on my name, Steve Rhodes, it'll take you to the landing page. You can test drive my newsletter service for 30 days. There's no risk to you. So today, folks, and every day, let's do all that we can do to think like a strategist. Because strategists, they will slay the tactician all day long. It is Terrific Tuesday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the Hotel California, because once you do check in, you'll never check out. Let's go check out these markets right now. We've got Dow futures off 36 points. They're trading out at 16,909. S&P futures down about 5 points, trading 1966. NASDAQ futures off 7, trading out at 38.97. Russell 2000 down 3 points, trading out at around 11.80. King dollar up 2 pennies this morning, trading out at $80.29. Goldilocks, gold up $7, trading at $13.23.90. Silver up 15 cents at $21.17. Light sweet crude flat, trading out at $103.54. Again, our call number is 877-977-6648. Too many things going on here. And if we take a quick peek across the globe out here, what we will see is that over in Germany right now, we've got the DAX. It's trading down 67 points. That's off about 0.7%. We got the FTSE down 0.75%, off 51 points. In Asia last night, the Nikkei down 65 points, about 0.4%. Unchanged in the Hang Seng, totally unchanged. Well, up 46 cents, up $4 in the Shanghai out here. So let's begin by taking a look at what's going on inside. We cover all the markets. So whether you're interested in commodities, currencies, equities, ETFs, the futures markets, and I always start off the morning session, the 9 o'clock session, by taking a look at what's going on inside the futures market. Then we can then we can take a look at where what the futures are really doing, where they're likely to move to. So let's go take a look at a couple of tools out here. Let's look at 4 different time frames. So if you're watching this on Tiger TV, in the upper left-hand corner of my screen, in fact, I'm going to just change this here so we do this on the fly. We'll make this a 120-minute time frame in the upper left-hand corner. We'll make it a 240-minute time frame in the upper right. We'll make it the daily time frame on the lower left, and we'll make it a weekly time frame that we look at things for in the bottom right. Now I'm going to switch over. We're going to go ahead and take a look at we'll start off by taking a look at the ES Mini out here. And we're going to take a look at the market profiles. Market profiles brought to us by our friends at TAS. And let's take a look at what's going on first. Let's go from longer term to shorter term. So let's start off and take a look at the weekly chart out here. We take a look at the weekly chart inside the ES Mini. It's in full-blown bullish mode out here. There's not a reversal signal. There's not a reversal candle. There's nothing. It's traded out in 1967. If it closes this week below last week's open. Last week's open, by the way, was at 1951.75. You would then have your first reversal signal. That would be a bearish engulfing candle. Last time we saw one of those was back here, looks like in the March time frame. So that's what it would need to. That's what the ES Mini would need to do on a weekly time frame out here, full bullish mode. If we take a look at the daily time frame for the ES Mini, what we're going to see here is this market profile, which is what market profiles are. They're a way to identify support and resistance and the area in between, the area where you see the most congestion, where it seems as if traders are happy to be either long or short. Well, in this case here, the resistance area, well, happens to be 1954.75. The ES Mini is traveling above that. Until the ES Mini gets below that, then when it gets below that level, then it can start to shift into maybe neutral to bullish. It does not start to get bearish until you start to see it close below the lower threshold line, the green line. That price level right now today is at 1934.25. If you take a look at the ES Mini as it came off of the bottom here on the daily chart, you'll see that once price reversed and got above the lower threshold, the unfair low, the support level, that has held all the way up into the lows. There was a little piercing of it back on June 12th, back on June 16th, but price got right back inside the trend and resumed itself higher out here. That is on the daily chart. We start to see chinks in the armor, though. We switch down to a 4-hour chart. If we take a look at a 4-hour chart out here of the ES Mini, what you're going to see is price has now started to hit resistance and now start closing below the unfair lows. We are starting to see a change in trend in the ES Mini on the 240-minute chart. Now, that could just simply lead to a retracement. And we take a look at the retracements as far as where price would retrace to. What we like to do is we like to take a look at swing points and use those as our anchors. On a 240-minute time frame chart, I would use as my swing point right here at 8 o'clock in the morning on June 25th. So if we go take a look at our Fibonacci retracement tool out here, we use that as the low. That low, by the way, is at 1937.25. We like to use our Fibonacci tool as a guideline as to where price may travel to. And when we take a look at, when I certainly take a look at Fibonacci retracements, I'm using what we call the dead cat bounce, the 0.382 retracement. That price level is 1962.59. That would be the likely first target area for the ES Mini. If it cruises through that area, the more likely target is going to be the 0.618 retracement. That's in the 1952-ish type range out there. That's what I suspect is the message of the markets right now on its 240-minute time frame. So if you are if you are a intraday-ish type trader, you like to know what's going on inside the daily trend, the daily chart out here. But you really want to be paying attention to is what's going on in some of these intraday time frames. If we go down and we switch down to the 120 minutes, so we're going to go from a 4-hour chart. Let's go down to a 2-hour chart out here. We're going to see really the same thing. However, we're going to see one other piece of information that is really critical. And that piece of information happens to be this candle right here that was formed going into the close yesterday afternoon. At 4 p.m., going into that closing session, again, we're using a 2-hour chart out here, what was formed was a hammer candle. That hammer candle If you as you listen to the show, you'll hear me with several expressions. When you take a look at a hammer candle is a one candle reversal where you had the bears really push down. If you take a look at the meaning behind this candle, you had the bears really pushing price down. In this case here, this session had opened at a price level of 1971. The sellers were able to push lower to 1967.25. But during that 2-hour session, in this case here, going to that 4 p.m. close, the bulls really stepped in. They're defending that territory. Well, if this next candle session closes below that low, 1967.25, my expression when you close below a hammer candle is if you are long, you are wrong. So we get back from this first break. We'll go use one of Stevie's other tools. We'll go use the A to B equals CD tool. We'll get some price projections of where things are moving to. We'll go take a look at Goldilocks. We'll take a look at silver. We'll take a look at some currency pairs as well. Welcome to the Hotel California, all of you new version 12 users from eSignal. We'll be right back.
Yeah, it's always better when we're together.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is better when we're together. Right now, we got the Dow futures off 32 points, S&P down 4, NASDAQ off about 6 points. So before we went to break, we were taking a look at the ES Mini. We were taking a look at the 120-minute time frame chart. And let's go back and take a look at that. Now, I had mentioned a hammer candle. That's a really important area for us to watch price and see what happens at that level. I mentioned that we'd take a look at A to B equals CD patterns. You see these markets here, they move in this lightning bolt pattern out here, maybe a pattern as well, but certainly a pattern. And with the lightning bolt, what the A to B equals CD tool allows us to do, it allows us to really project price, identify where price will move to. If we take a look at another hammer candle that had formed out here inside the ES Mini, that took place at the session that ended at 2200 hours on June 15th, so that was at 10 o'clock in the evening. If we take a look at that low, that becomes our A point of an A to B equals CD to the upside. Our B point is going to be the swing point high. That took place at 12 noon on June 24th. Market retraced, made a low down here at about 10 o'clock in the morning during that session on June 26th. The 1-to-1 A to B equals CD to the upside out here gives us a price projection of 1977.25. As I go ahead and I zoom in here, you'll see that what price actually did, it actually got up and closed out at 1977.50. That's on the trading session coming in at 2 o'clock on July 3rd. That was, well, really, it was the 12 noon session, right? 1 o'clock session, I should say, on July 3rd on Thursday. So how about that? As the fireworks were just about ready to kick off, they really kicked off inside the markets. What the ES Mini did was it completed a longer term on the 120-minute time frame from one hammer low, made a 1-to-1 A to B equals CD. So it's natural for price to pull back. And when we take a look at these market profiles out here on this 120-minute time frame, they're what are giving us the indication as well as a potential close below that hammer candle out here that took place coming into yesterday's close. Now, just as an example, as a further example as to the importance of these hammer candles out here, what I've done here is I've put another chart on my screen. You see, I've been using eSignal as my data feed forever, and it feeds 3 of my charting applications. Obviously, the eSignal charting application, the Ninja Trader application, that's what I've got on my screen here right now, as well as the Ensign Windows software. I use all 3 packages for different and various reasons, all great packages out here. Here on this trading platform, I've got all the different hammer candles identified for you. So you can see the one that's in question right now that we're dealing with coming into the 4 p.m. close out there. And again, that low that we're really watching for is a low of 1967.25. If we see a close below that, not a piercing below it, but a close below it on the 120-minute time frame. Our next 120-minute time frame ends in about 33 minutes out there. If we see a close below that, that says if you're long, you're wrong. That means that price will move lower. Take a look at the hammer candle, small one, albeit at about 2 o'clock in the morning. That's on the trading session of June 3rd. You can see that certainly held lows out here. Let's go back a little bit further. Here's the hammer candle that I pointed out earlier that we went ahead and created that A to B equals CD from, well, maybe that's a hammer, maybe that's the one. But this one here is on 8 o'clock in the morning, the session that ended 8 o'clock, and that was on June 27th. That's the hammer candle. That hammer candle held. Here's one that failed. Here's one that failed. This took place at 10 o'clock in the evening. That was on June the 23rd out here. You can see once price closed below that area, we saw one more move up inside the market. Of course, all those gains were given back in that same and another 2-hour time period. And you saw price move lower. when the bulls start to lose their footing out here, you will see closes below a hammer candle. That's why that is so important. I'm just moving back here a little bit further. Here's a hammer candle back here on June the 4th. This one coming in at 10 o'clock in the morning. You can see these are great candle sessions. Now, look, folks, you do not just trade on candle sessions. You need to be taking a look at other things as well. What else is going on inside this hammer candle? What other patterns might be out there? So don't just trade based on hammer candles, but they are important pieces of information for you and I as to what's going on inside of the stock market. If I take a look at one of our other tools out here, one of my tools that I like to use, it's called the Euro-Japanese Yen. And why is that? It's because the Euro-Japanese Yen is really the carry trade. It's the currency pair that best tracks the U.S. stock market better than anything else from a directional standpoint out here. Now, the pattern that you're looking at on my screen here, this is a pattern that I drew in for my subscribers yesterday. And yesterday what I pointed out was what? A hammer candle. This hammer candle came in at 7 o'clock in the morning, and I drew in a pattern here. This is, by the way, this is a 0.786 Gartley buy pattern. Had a price projection of 138.17. We've seen here so far this morning, during the session that we're in right now, is a low of 138.15. You got to like that. 2 pips. You got to like that stuff. This, and you can also see that this is in an oversold condition. If this pattern here holds, we'll likely see a bounce inside the market, and that hammer candle in the ES Mini will hold. We'll be right back, folks.
It's always better when we're together.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
And we're off to the races. We got the Dow down 77 points, trading out of 16,947. S&P off 7.5 at 1970. That composite down 15 at 44.36. Russell 2000 off about 5 points, trading out 1181. Lead the charge to the upside. McGuire Infrastructure, MIC, is the ticker symbol. Nice move this morning, up 11%, up $7. Right now, trade on at 68.15. We've got the Nugget, Direction Gold ETF. That's the 300% move of the miners. That's up about 3.5%, up $1.62. PHH Corp up $1.16. That's up 5%. Guess the jeans manufacturer, GES, is up about 3%, up 85 cents here. We've got Therapeutics MD, TXMD, is a ticker symbol, up 18%. That's up 77 cents right now. To the downside, lead the charge is Tesla Motors. Tesla off $5. We've got Goldman Sachs down 2, GW Pharmaceuticals, GWPH off 358. Fresh Market, not so fresh this morning, down to $2 and change, a little over 6%. United Airlines, Delta Airlines, both each down to now about $1.80 right now. Seadrill Limited off $1.66. So that hammer candle we were looking at inside the ES Mini, it's under attack as we speak. Remember, that candle session does not close until 10 a.m. out there. Let's go take a look at some equities here that are moving and grooving to the upside. Let's take a look at this McGuire Infrastructure. Let's go see what it is doing out here, moving what looks like to all-time highs. Yeah, most certainly is. So everybody inside this equity is certainly celebrating. Let's put this on a little longer-term chart out here. Let's go see what kind of pattern. But this is gapping up. It's got some nice volume behind the move. We can see a couple of its most recent sign of strength. There are two of them out here on the daily chart. First one taking place here on May 1st. Now, that sign of strength had volume of 812,000 shares. That was going against a little sign of weakness that this equity had with 1.3 million shares. Nonetheless, the swing point prior to that move to the downside, that swing point is really where all that information is released to us. And that swing point is a couple of sessions earlier. That's the February 18th time frame. 222,000 shares there. So that swing point was taken out with volume to the upside. That was done on May 1st, 812,000 shares. There's your real first breakout and sign of strength out there. You had a market that was trending. What was that market doing? If we take a look at it, in essence, that market was really trending higher, and then you had a sign of strength taking out a swing point. That, folks, is the way that you want to see swing points taken out. Wide price spread, accelerated volume. It just simply didn't have much additional momentum. The following couple trading sessions out there took a little bit of a timeout, but it did that because it was in the overbought condition. If you take a look at the 14-period relative strength indicator out here, you'll see that price was above the 70 level. That's where you start to get into an overbought condition. Now what it's doing here, we saw another sign of strength inside this equity. No real wide price spread, but you saw some nice volume July 1st. Maybe somebody knew something out there, 600,000 shares. Not like it's a heavily traded equity. Nonetheless, it looks PDG, pretty darn good to me out here. If we take a look at a weekly chart, let's go see the A to B equals CD patterns that look like may be underway inside this equity. Let's take a look at a a small one, because what we're going to see here is the swing point on the weekly basis. That's the week of the trading session from April 29, 2013. That area was taken out with lighter volume out here. Nonetheless, you've got price moving up. Let's take a look at the smaller A to B equals CD pattern, get an idea of where price is likely to travel to. I'll use as the swing point area. We'll use the low out here from May 21st, 2012. That'll be our A point. That B point's going to be that level from April 29th. And the retracement just down into the June 24th area. It looks like, even though it's up and above on lighter volume, looks like this equity wants to run to about the $78 level. Right now trading out at $67.75. That is on McGuire Infrastructure's MIC, not M-I-C-K-E-Y, but MIC is the ticker symbol out there, looking pretty darn good. If we take a look at Abengoa, ABY is the ticker symbol. I'm not going to take a look at the nugget. We'll go take a look at gold here and see what's going on. This looks like a recent IPO. No reason for me to spend a whole lot of time there, so I won't. Let's go take a look at ConocoPhillips. Yeah, it's got to be. No, ConocoPhillips is COP. PHG out here. I'm not sure what the name of that equity is. Phillips. Well, we got Phillips out here. Let's go take a look at something that we do. Let's go take a look at Tesla Motors. Let's go take a look at what that is doing to the downside out here as we speak right now. So you got Tesla having broken through a market profile support level. It did that 2 trading sessions ago, broke through this on July the 3rd. So on Friday, interestingly enough, as the markets were moving higher, Tesla was moving lower. One of the high flyer stocks out there wasn't flying with the markets. In fact, it was cracking a support level. We haven't seen Tesla crack a support level. Let's pull this back here. Has not broken a support level after it came off of the bottom, after it came off of the lows here from May 9th. Went ahead and completed a 1 to 1.272 A to B equals CD to the upside. And then we saw the resistance areas truly act as resistance of its market profiles. And now we are seeing a break of a support level. Never a good scene. So what does that say? Well, I come back and take a look at the breakout session that Tesla had. It's trading into that breakout session. That's a high volume session from June the 16th. As 13 million shares to the upside. So long as Tesla pulls back to the low out there of 206.26 and can hold that on lighter volume, meaning to test that area, closes back above it, then maybe what we're going to see Tesla do is maybe set up some type of consolidation. If it does not hold that, or if volume accelerates to the downside, meaning more than 13 million shares, then what it will do is it'll go ahead and break right through that low, which is 206.46, and it will likely go ahead and take price all the way back down to the lows here from May of 2009 in the range of about 177 to 183 out there. All right, it is time to go take a look at Goldilocks. She's trading up $7 right now out at 13.24. I'm going to switch over. We're going to go take a look at the market profiles out here inside of gold, and we're going to take a look at the daily chart. So let's switch over. Let me switch over to gold. Now, the daily chart that we're looking at, the market profiles, because of being able to stitch together each of the contracts out here, I have to create a unique symbol in order to be able to do that, be able to get all the math correctly. That means what I've got really here is a 10-minute delay. So the price on this chart here just slightly different than the active price inside the August contract for gold, but close enough. Let's go take a look at what's going on inside the daily chart. What we're going to see here is gold had one heck of a nice breakout session, accelerated volume, wide price spread, as it was taking out or trying to take out a swing point, just like that first equity that we took a look at out here. And what we see here is wide price spread. That was on June 19th. Gold also at that stage getting into the overbought condition. So just simply with small-bodied candles has moved sideways out here. Now the resistance area for gold is 1326.60. 1326.60. You can see right now it hasn't pierced that area. A close above that would then all of a sudden give us an indication of gold wanting to make the next move up, potentially. But you see, because we've got a swing point out here from July 1st, we really want to go ahead and use that as our target level. And that says Goldilocks needs to close above 1334.90 in order to really break out to the upside next. Now, that's a swing point. You see, it wasn't this wide price spread, accelerated volume candle session from June 19th that's a swing point. This is the swing point. This is the measure. This is the level that we want to be paying attention to July the 1st out there. If gold gets above 1334.90, your question would be, hey, Steve-O, where is it going to travel to? Well, we go take a look at the A to B equals CD. We take a look at the swing point low, this little doji candle on June 3rd. That's our A point. The B point now is going to be that trading session from July 1st, and our lowest low since then took place a couple trading sessions later, July the 3rd, coming into Friday. And that low down there is at a price level of 1309. If gold takes that out, just the 1-to-1 A to B equals CD says that gold ought to move up to the 1404 level, but I hearken to say that's not the case. It would more likely travel to 1429, maybe to 1462, but we're not there yet. And the question is, what could get in the way of gold breaking out? It's a great question. I'm glad that you asked me that question. I'm going to show you what that is. I'm not going to be able to show it to you on the gold chart, nor am I really going to be able to show it to you on the silver chart out here. But we're going to go ahead and take a look at both of these commodities. Now, the CFTC each Friday releases their information about their commitment of traders. Now, that commitment of traders information is broken down into three groups. It's broken down into what's called the commercials, the smart money out there. That's the big money. What are the big guys doing? And then it's broken down into what's called the weak hands. It's the individual traders. That's really what they refer to, the folks like individuals like you and I that would trade the CFTC, the futures. They would call us the non-reportables. How does that make you feel? Hey, it doesn't matter to me what they really call us. Actually, what I like to know is what happens with regard to that group, and that group tends to stay at a party too long. They stay short too long, or they stay long too long out there from a time frame. And then you've got the in-betweeners. Well, what I like to do is I like to take a look at what's going on inside the commercial accounts. Now, I didn't update the CFTC data. I haven't updated it for probably the last 3 weeks or so. So the data that you're looking at on my screen here is a little bit delayed. And if you take a look at my screen, this is the e-signal application. And if you take a look at the bottom quadrant, happens to be the relative strength indicator. The quadrant just above that is where I take a look at the commitment of traders data for silver. When I do it, I also do it for gold. But I can tell you, as I took a look at the numbers here yesterday, because you see this Friday was a holiday, so the numbers weren't released. They were released yesterday. They released yesterday at 3:30. And as I take a look at those numbers, what's interesting to me is that the commitment of traders data shows that the commercial traders, the big money, the smart money, have taken net short positions as a percentage of open interest greater than at the levels when we last saw a market high out here in silver at the swing point of February 28th. It's also at levels higher than when we saw a swing point high inside of silver the week of August 30th. So it does have to make you say, something to think about out there. Because as gold is broken out, as silver is broken out, if you're taking a look at the silver, if you're watching us on TigerTV out here, and if you're a new eSignal 12 user and you're just tuning in to TigerTV, the application that's now available to you on your trading application. Remember, you can always give us a call at 877-927-6648. You've got 9 hours of live programming today. I'm with you for this first couple of hours. All kinds of great hosts out here to help guide you as to understand what the markets are doing out here. What I can tell you is the large commercials are back up to large net short positions. Now, here's the problem with the COT data. Really, the only problem is that you can't really necessarily use it as a timing tool. And you can't because these large commercials take time. They're like big ocean liners out there. They don't turn on a dime. They're not like traveling inside a little nice ski Nautique out there, which can go ahead and move on a dime. But it is interesting to note that the large commercials are smart money. Now, maybe that's mines that are selling forward their silver out there. Maybe that's one of the reasons for the rise out there, because they're going to be included in that data that I'm taking a look at. But what I can tell you, if that's the case, and you were a miner, and you were taking a look at what your expectation of what the market was doing inside silver, would you sell now? I'd just say, something to think about. So that is when I ask, what is it that could get in the way? I can tell you that the large money is saying, hey, maybe not so fast out there. So what does that mean when we go ahead and we put all that together? I will tell you that gold, that the commercials aren't up to the same levels in gold as they are in silver. But I like to use them both together because they both provide us with an interesting message of the markets. And so that brings us back to our market profile level. That brings us to the 1326 area, 1326.60. And that says that you need to see gold at least close above that, but most certainly the 1334.90 level before it continues to break out. So if you're long, just make sure you're using some relatively tight stops if you are trading the gold contract. Let's go back and take a look at the futures market here. We're seeing the markets kind of fall apart a little bit here. We're seeing the hammer candles. That certainly is being busted through. There's another, 12 minutes as we go into the trading session, but the Dow's now off 93 points. Let's go take a look actually at the New York Stock Exchange. Let's go take a look at the message behind its stock chart pattern out here. Give me a moment. We'll punch that up on the screen. And we take a look at the New York Stock Exchange. I'm going to switch back over to the E-Signal chart. The Anson Windows chart out here, because I'm able to incorporate the McClellan oscillator, the summation index, the volume oscillator into the chart. And when we take a look at the New York Stock Exchange, what it's done, it's made a 1-to-1 A to B equals C to the upside. Here's these lightning bolt patterns again, 1-to-1. We take a look at the low out here from June the 12th. That's your A point. The B point is on June the 20th. A retracement down into what looks like a hammer candle. It's not a hammer candle, but June 26th low out there, and that was at a price level of 10,881, I should say. 1-to-1 A to B equals C. Guess what? That completed as well on Thursday. And then yesterday, we saw a bearish reversal signal. That bearish reversal signal, known as a bearish sash candle, only by a few pennies was it not a bearish separating line. A bearish separating line, other than a gap down, is the most bearish pattern of them all on a two-candle session. 877-927-6648. We'll be right back, folks.
Well, it's always better when we're together. Yeah, it's always better when we're together.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these three conditions. 1, choose only one pearl. 2, remove one pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. We've got the Dow trading off 95 points right now. S&P is down at 10. And again, a hearty thank you to the extraordinary efforts by the team at Interactive Data, the folks at eSignal, the team here at TFNN.com for being able to get TigerTV, live TigerTV integrated into the eSignal application. That is version 12 out there. Folks, if you are looking for a data provider, if you're looking to test drive a system out there, let me recommend that you go over to the eSignal website. You can test drive that for free for 30 days out there. Obviously, if you're listening on the eSignal application, welcome to the Hotel California here at TFNN.com. Once you check in, you never check out, so you'll be with us for a long time. Let's go to Victor in Paramus, New Jersey. Victor, thanks for calling. Thanks for holding. How you doing today?
Good. I was looking at Twitter, but before I say that, I think tomorrow's Weird Wally Wednesday or something for experts.
Yes.
So it looks like that's where you're coming into a lot of, because a lot of things are overpriced now.
Well, certainly some volatility. Now, in the case of Twitter here, Victor, what are you looking to do?
There's a gap around 34 something, and will that get filled? I was thinking about looking at it because it's name recognition. I don't think it's going away. Like they use Twitter in the White House and all that when they leak out their.
Okay, all right. So if you're looking for a buy in Twitter, one of the spots. No, not now, but if you're looking for it, one of the spots that you're going to want to watch Twitter is back on the trading session, Victor, of May 6th. And this had a big gap down. There was some institutional selling. That was institutional selling at the low, so it wasn't any volume off the highs or anything. But
selling
take
at the
a look
low
at
or buying at the low?
This was selling at the low.
Oh.
Yeah, so there was some selling down here on May the 6th. It actually had gapped down. It was already in a downtrend out here, and that looks like the area where price is likely going to target. If it closes below 39.49 today, it'll break a support level of a market profile. And I just go to that candle session because it's the highest volume session out here, and that says watch Twitter, Victor, as it gets into 36.10. That's the high of that session. The low of that session is 31.72. If it closes inside 36.10, pretty good chance that Twitter will come back and will actually test the session after that on May the 7th. And that's where your real piece of information will come. If Twitter can pull back all the way to that low, which is 29.59, 29.51, you'd like to see it get to 29.50, close back above it on more than 68 million shares. That would then maybe set up your buy on Twitter. But right now, and here's the thing.
The candle chart on that, anyway, when you have those big down days, is that anything in candlesticks or no?
No, that specific candle, there's nothing associated with that from a candlestick, a continuation pattern, or anything along those lines. What I was going to say is you want to be careful with Twitter, especially at that swing point, because that May 7th swing point is its all-time low at this stage.
You're saying it's going to get down there?
It appears that it is.
That's buying or selling, you think? That's selling or buying? Don't you have buying at the bottom?
No, you've got selling at the bottom. You have not. This has not had a sign of strength off of the bottom. It's had, and I use that. The reason that I say that, Victor, is because we had that big down session on May 6th. That's a real big signal to you.
November 13th is a big high volume there, too, around there. What was that, buying or selling there, too?
November 13th, well, I can tell you in February it was a lot of selling to the downside. December 26th was a high volume high, but that unfortunately we've seen more volume at the lows than we have at the highs out here. So I would say just be careful. Just be careful.
It's going to close the third. There's a gap around 34.44 or something. It's going to close that gap. You think it's going to come into that candle then around May 6th? Maybe? I would be watching that May 6th, May 7th area.
Okay. Thanks, Victor. Thanks for calling, folks. It is Terrific Tuesday. Thanks for tuning in to TFNN. We appreciate you being here with us. Stay tuned. The Money Master Show will be up next, so I'll be up next. If you're off to start your day, have a terrific Tuesday. I look forward to seeing you bright and early tomorrow morning. Take care now.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.